You're about to witness a historic shift in global financial power. Imagine waking up one day and seeing the dollar, the symbol of American strength, losing its value around the world. This is already happening, and Ray Dalio, one of the greatest investors of all time, is sounding the alarm. Get ready, because what you're about to learn could change your financial future. Like, share, and subscribe so you don't miss insights that could help protect your wealth. The changing world order. Throughout economic history, the world has experienced major turning points every century. Ray Dalio reminds us that just as the Dutch guilder ruled the seas in the 17th century and the British pound dominated trade in the 19th century, the U.S. dollar took the throne after 1945. Now, he sees clear signs that another historic shift is rapidly approaching. But like every financial empire, the dollar's dominance has an expiration date. Today's scenario echoes the 1930s in alarming ways. Economic turmoil, currency devaluations, and fierce trade wars. What once seemed solid and unquestionable is now showing deep and worrying cracks. As history shows, the transition of a global reserve currency is never peaceful or smooth. It comes with financial crises, political tensions, and abrupt shifts in capital flows. We are witnessing the first steps of transformation that will be felt for decades to come. The dollar's role as a reserve currency. The dollar shined brightly after World War II, established as a global reference through the Bretton Woods agreements. This privileged position gave the United States huge advantages, funding its growth, maintaining geopolitical power, and controlling international markets. Having the ability to print a globally accepted currency was a superpower in America's hands. However, the dollar supremacy is being increasingly challenged. Countries like China, Russia, and members of the BRICS are actively seeking alternatives to break free from their dependence on the American currency. Moreover, trade tensions and the political use of the dollar as a sanctions tool have accelerated the search for new payment systems. This shift is like owning the only water well in the desert, only to see new wells springing up. The exclusivity that once generated immense wealth and power is now dissolving as the world reorganizes to reduce its vulnerability to American control. The structure of the economic cycle according to Ray Dalio. Ray Dalio explains that economic empires follow a predictable cyclical pattern, unfolding in three distinct phases. First, the rise comes with innovation, quality education, a strong work ethic, and major investments in infrastructure. These factors propel a country to global economic leadership and create a climate of growing prosperity. Over time, success breeds complacency and a significant rise in internal costs, along with shifts in social values. Productivity declines, debt levels surge, and the country begins losing competitiveness to emerging players. This marks the dangerous turning point in the cycle. Finally, the decline phase sets in, characterized by excessive debt, uncontrolled money printing, and a loss of confidence in the system. History has shown this pattern with Rome, Venice, and the Netherlands. Today, all signs suggest that the United States is following the same path. Current sources of instability. The weight of U.S. public debt has reached an astonishing 122% of GDP, a level that threatens the country's fiscal sustainability. This record debt, combined with growing deficits, undermines the United States' credibility as a global financial powerhouse. In times of crisis, trust is the most precious and the most fragile asset. On top of that, the country is facing deep internal political divisions, with extreme polarization between ideologies and an increasingly fragmented society. This internal instability weakens America's ability to craft cohesive and strategic policies in an ever more competitive international landscape. Externally, the America First strategy has led to diplomatic isolation and the weakening of long-standing alliances. The result is a climate of distrust and less global coordination, the exact opposite of what sustained American hegemony over recent decades. The impact of globalization and domestic production. According to Howard Marks, we are witnessing the end of the golden age of globalization, a process that has fundamentally changed how economies operate. Supply chains once optimized for cost and speed are now facing new barriers, uncertainties, and geopolitical restrictions. This shift is changing the dynamics of pricing and product availability. Production costs are rising as companies move their factories back to their home countries. Imported products that were once cheap and plentiful are becoming more expensive and less accessible, directly affecting consumers' pockets. Volatility is becoming a constant presence in the markets. In response to this new environment, we are seeing growing investments in strategic sectors like defense, energy, and infrastructure. Those who understand this trend now can position themselves to seize the new opportunities that will emerge as supply chains are reorganized. Financial market behavior. Recent behavior in the bond markets has raised serious red flags among analysts and attentive investors. Traditionally, during times of crisis, markets would rush to buy U.S. government bonds as a safe haven. Now, the opposite is happening. Massive sell-offs of treasuries even during market downturns. The traditional pattern has been broken in a troubling way. This is unprecedented and extremely concerning, as it signals a loss of confidence in what was once considered the safest asset in the financial world. Behind-the-scenes reports suggest that China may be selling part of its massive U.S. Treasury holdings as a deliberate strategy to put pressure on the American economy. The potential impact of this move extends far beyond China's borders. If confirmed, these actions could have devastating effects on global financial stability. Higher interest rates, the rise of alternative currencies, capital flight from emerging markets, and increased global volatility are just a few of the possible consequences of this new scenario. The global financial order is under silent attack. The Federal Reserve's response. The Federal Reserve has already shown it is willing to do whatever it takes to maintain liquidity and stabilize the financial system. Faced with growing Treasury sell-offs and market pressures, its immediate response is always the same: print more money, expand the balance sheet, and intervene aggressively. However, this emergency policy carries new long-term risks. While effective at putting out short-term fires, this strategy comes at a high price. Each new wave of monetary expansion erodes trust in the dollar and plants the seeds for future inflationary crises and financial bubbles. What saves the economy today could trigger an even bigger and harder to control collapse tomorrow. There are plenty of examples. After the 2008 crisis, excess liquidity created massive distortions in assets like real estate, stocks, and corporate debt. We are now repeating the formula, but on an unprecedented scale. The Fed's ability to maintain stability will be tested in a far more hostile environment. Reflections on predictions and investment strategies. It's important to acknowledge, not all of Ray Dalio's predictions have played out exactly as he expected. The market is dynamic, full of unpredictable variables, and getting every call right is impossible, even for the greatest economic minds. Humility in the face of market complexity is essential for survival. However, ignoring consistent and well-founded warnings would be an even greater mistake. The best strategy is to maintain a flexible and diversified approach. Combine solid American stocks, promising international markets, exposure to Bitcoin, and protection through real assets and resilient treasuries. Adapting is the key to financial survival in uncertain times. Never bet everything on a single trend or narrative. Major global changes are unpredictable in their exact timing, but inevitable in their direction. Preparing today is essential for anyone who wants to preserve, grow, and protect their wealth for future generations. We are witnessing the beginning of the end of one era and the start of another. The dollar may not disappear tomorrow, but its absolute reign is clearly under threat. Are you ready for this new world? Diversify, study, and protect your assets. The financial future belongs to those who act today. If you enjoyed this video, like, comment, and share it to help more people protect themselves from this silent revolution. And of course, subscribe for more content that truly makes a difference.